Hello again, and welcome to another episode of the AFA Academy Talks. Again, joined by Mr. Ariel Grutch, owner of AFA, and Nir Gadot, our CEO.
Hi, Thomas.
Hi. The principle we're discussing today says growth without debt is a life insurance. Wow, that sounds interesting. Help me to understand what this is about. A life insurance isn't growing with external funding the normal way for a company to grow?
You know, it happened to be my birthday today. So allow me to explain this with my personal background. When I was a student, I worked for my father in the summer. And he was in the insurance business. And he tried to explain to me what is life insurance policy, why insurance companies make so much money out of life insurance. And obviously, it became very clear to me that the life insurance does not insure life. It insures money to the heirs. The meaning of this principle is not that not having debt ensures that you will be forever. But what not having debt is that when the time things are difficult, you are not relying on a creditor that you owe money or it money, a bank or whatever, because they are expecting to get paid and you might not be able to pay. So in this regard, if you don't have any debt, you really have a life insurance. Because business is up and down, sometimes are good, sometimes are bad, and you have to sail through the bad times with confidence, with purpose, and with the same passion that you have to the business in the good times. If you have someone on your back saying to you, you owe me money, you got to pay my money, and so forth and so on, so you lose focus, you're now no longer doing what you're supposed to do. So I'm against taking debt, because not having debt is really ensuring the continuation of your business as a normal way, rather than becoming something else.
Thank you, Ariel. I understand from an internal perspective. Looking at the outside world, many companies are leveraged. That's how they drive their growth. Many companies talk about exponential growth. What you said, and what the principle means, what's the implication on the growth of AFA?
So, first of all, I don't want it to sound like as if we are not borrowing money. We are borrowing working capital. But if you want to grow with innovation, it's a very risky proposition. This is why if you look at Silicon Valley, they get money from venture capitalists. Venture capital is a money that is basically geared for growth where failure is almost guaranteed. But we don't want to go to venture capitalists, and venture capitalists don't want to go into a plastic packaging, right? So we need to find a way to grow and come up with our innovations and accept that 90% of them will not be successful and be able to continue to drive without stoppage, without interruption, without anything coming in our way. So we don't want to borrow money in order to create a new platform of technology. That doesn't mean that we don't borrow money in order to invest in a proven product. So once we innovated something and we have a product that is proven itself and there is a big demand for it and we need to build new capacity, of course, we will borrow money to put in the capacity because we know we can return the money. It's a very little risk. So, yeah, typical American company will say you are slowing down your growth. Maybe, but I'm only 60 years old. I have a lot of time, so no problem.
Interesting. So that sounds like a different kind of growth, a healthier, more long-term growth. And I guess that's also relevant in light of the fact that AFA is a private company.
Exactly.
That is correct, Thomas. I mean, in terms of, you said the right word, this is long-term. Many companies, they only consider short-term. Our innovation and the way we think is maybe a decade ahead. You know, when we came up with the first innovation, it was an all-plastic trigger sprayer with a new engine that basically was the reinvention of the trigger sprayer that was invented 60 years ago. Nobody innovates in this area because there's no money there. But 25 years ago, we came up with this invention, and I said all plastic. Nobody at that time was even thinking about this. Now it's a mandatory requirement for all of our customers in this industry that you have a recyclable product. We invented it 25 years ago. Our competitors are coming up with these solutions maybe just a few years ago.
Perhaps I'm going too far, but listening to that, I even dare to say that this kind of slower, more long-term growth makes us a better partner, a more long-term partner for our customers. Would you subscribe to that?
Yeah, simply because it allows us to be adventurous innovation. Come up with things that nobody wants, come up with things that nobody thinks about, come up with things that are not acceptable in a commodity environment. It allows you to use the capital of the company to take chances, to take a risk without the consequences of all of a sudden someone gave you money and he stands on with a gun to your head.
There is one more thing to say. Our innovation are often disruptive.
Right.
In order to bring them to the market, for the market to accept, it takes many years. And that is also goes along with the fact that we are a long-term player. And the customers who appreciate that, the customers are also thinking ahead because they are long-term thinking and they want to secure their business in the future. They come to us and we talk together about what could be future trends. We mentioned in one of the other episodes about the fact, one of the basic principles in our innovation that we think about moving from single-use products into durable systems, because this is the most effective way to tackle the problem we're facing today with too much waste, plastic waste in the world. So it's not about recycling so much because there is a limited capacity of how much waste we can recycle. It's about preventing waste. Preventing waste by making durable products that will last for a few years. The big players in our industry, they understand that, they preach for that, but they have difficulties to change on short term. And that's why those who understand and those who are working on long term in order to change the environment, to influence consumers, they are our partners.
Listening to your words, those remind me very much of the mission and vision of AFA, of being a step ahead, the disruptor. And what Ariel, you just explained, that rigidness in the financial management allows us to take those daring steps. So ultimately, that rule that sounds very financially driven is at the heart of the strategy.
Yeah, definitely.
Correct?
Yeah.
Wow, that's very inspiring. I thought we were going to talk financials only, but this is strategy.
No.
Very inspiring. Thank you so much.
Thank you.
Thank you.